Good afternoon, everyone, and welcome to Gjensidige's fourth quarter 2025 pre-close call. My name is Mitra Negård, and I am Head of Investor Relations. With me, I have our IRO, Jonas Fougner. Please note that this call is being recorded, and the recording will be published on our Investor Relations website after the call. We will start with going through the Q4 reminder, which was published on our website yesterday. This reminder highlights relevant public information and will not include any new business updates. Afterwards, we will open up for a Q&A session. As always, we only answer questions related to already disclosed and public information. And please note that if you want to ask questions, you need to log on via the Teams app. Over to you, Jonas.
Hi, everyone. Let us start with a few key dates. Our silent period starts on the 1st of January, and we will be releasing our Q4 results on the 29th of January. As always, we kindly ask you to forward your estimates using the template I sent you yesterday. And please fill in all open cells in the sheet. We have included control lines to help you identify and avoid potential errors in your sheet. Please make sure the control lines are error-free before sending the file back to us. The deadline for sending us your estimates is the 16th of January, and we will publish consensus on our website on the 24th of January. Now let's move on to the reminder. As usual, we start with the comments on the weather. For the sake of good order, we always remind you of the seasonality in our business, with the winter quarters Q1 and Q4 normally having higher claims ratios than the summer quarters Q2 and Q3. Scandinavia has experienced a mild Q4 so far, with precipitation levels ranging from normal to above average and notable regional variability. At the beginning of October, Storm Amy struck several countries in Northern Europe, with Norway being the hardest hit country in Scandinavia. As communicated in connection with the Q3 2025 earnings release, total claims cost for the group in the fourth quarter of 2025 related to Amy is estimated to approximately 400 million kroner, net of reinsurance and including reinstatement premiums. These costs will follow our usual principle for distributing large losses, as outlined in our quarterly reports. Losses up to 30 million are charged to the segment where they occur, and any amount above that goes to the corporate center. The 30 million limit applies to the total for all segments, not per segment. And as mentioned, Norway was the hardest hit country in Scandinavia from the storm. As communicated earlier, the results for ADB Gjensidige, our Baltics business, are presented separately in the group accounts as profit or loss from discontinued operations until completion of the transaction, which we expect will take place in the beginning of next year.
Over to large losses. The expectation for 2025 is, as we have communicated earlier, approximately 500 million per quarter. And for the sake of good order, please note that this figure is an estimate and not a guiding per quarter. Large losses are, as you know, random in nature. And in terms of quarterly estimate, we simply divide the annual estimate by 4. In terms of excess reserves, there is no change in the communication. We continue to set reserves according to our best estimate. And bearing history in mind, we expect run-off gains and losses also in the future. On inflation, we will, as per routine, provide an update at our earnings call. Please see our reminder for references to the relevant slides and pages in the Q3 2025 quarterly presentation and report. Moving to solvency, as usual, we have listed the main items for the eligible funds and capital requirement in the reminder. Remember that the eligible funds at the end of the third quarter this year included approximately 520 million of the 900 million Tier 2 bond we issued in October last year. We expect the eligible amount of the Tier 2 loan to increase over time as the capital requirement increases, driven by growth. Bear in mind the mechanics for dividend treatment when calculating eligible own funds in Q4. For the first to the third quarter, the deduction is based on the formulaic dividend equal to 80% of profit after tax. In Q4, however, the amount deducted is the residual of the proposed dividend for the year. Moving on to our investment portfolio, as always, we believe a good starting point for estimating returns is using the same asset allocation as the previous quarter, applying returns on the indices we have listed in the reminder. And finally, on unwinding and changing financial assumptions, remember the rules of thumb and the example calculation published on our website. And as per routine, our reminder includes updated swap rates. So with that, we will now open up for questions. Please raise your hand and we will open up your line. Yudish, please. Your microphone is still... Is it open?
Yes, your line is open, Yudish.
Hello?
Yes, hi Yudish.
Hi there. Thank you. Good afternoon, everyone. My question is in relation to Storm Amy, actually, and the loss of 400 million you flagged. Firstly, is that loss, does that cover your share of the natural perils pool's loss as well as losses outside the pool, or is that just natural? Okay.
It's total natural perils and other claims.
All right. And then secondly, I mean, given the size of the loss, does that mean the entire amount gets charged to the corporate center, or do you charge up to 30 million in the segments and then the balance to the corporate center?
Yes, the latter. As Jonas said, our policy in terms of distributing claims between corporate center and segments, as always, is 30 million on the segments and the rest to the corporate center. And the 30 million applies across all segments. So when there is one event that hits several segments, it's 30 million in total for the segments and the rest to corporate center.
Okay, fine. Thank you. And finally, final question on the solvency capital. Is there any seasonality in your SCR in the way you actually, model it?
Yes, there is some seasonality, but have a look at the reminder that we published yesterday. There you will see some comments in terms of general seasonality effects.
All right. Okay. Thank you. Thank you very much.
You're very welcome.
Any other questions?
No? Okay. There doesn't seem to be any more further questions. So thank you very much, everyone, for your attention.